So let's talk about it all, the macro market, earnings, and more. With us on set, Bespoke Investment Group co-founder Paul Hickey, one of our favorite guests. Paul, thank you.
One of my favorite anchors.
Well, there we go. It's a mutual admiration society. I love it. To what do you ascribe this incredible 11-day streak for the NASDAQ?
So I think it's just optimism on the part of the market that we are seeing a resolution. You know, it reminds you of last April when every day after Liberation Day, we started seeing headlines to the effect that this was going to be an economic catastrophe, yet the market bottomed within a day or two after Liberation Day. The negative headlines kept going up. You know, there's tons of negative headlines we continue to see about oil and the disruptions that it's going to cause, but the market is sending a completely different message, and it's hard.
Why? What's the disconnect?
Well, so I think the underlying economy has been very strong. You look at the banks reporting today. Their loan growth is up 10% year over year. That's the highest rate since we've seen since going back to the financial crisis. So you haven't seen that level of growth. You know, you talk about concerns in the labor market. The unemployment rate's at 4.3%. That's very low, and jobless claims remain low. So we're not seeing incredible job growth, but we're not seeing those jobs falling apart. And in the Beige Book, we saw 8 out of 12 districts reporting growth, which is not a deterioration of what we've seen versus recent Beige Books. And for all the talk that this disruption in these higher oil prices were going to derail the economy, it's only been 1 month. If that goes on for 3 months, we have a problem.
Yeah.
But 1 month does not make
and
that,
what you're saying is a critical point, because we've got this wall of earnings, all these banks and financials out this week. Goldman Sachs beat, JP Morgan beat, Wells Fargo beat, Citi beat, Bank of America beat, Morgan Stanley beat. First off, if you work for those banks and you don't beat, you should fire your CFO and hire another one, because that's your job, is to basically beat the street. But this idea that 2 of the 3 months that these companies and everybody else either reported or is going to report, that was pre-war. The war effectively, the supply chain shock began the beginning of March. So 2 months were sort of normal. With that in mind, how much are you watching the first quarter?
So we'll look ahead to see what the companies say. Again, last year at this time, we would say no company would, in their right mind, would raise guidance or even talk positively about the outlook given the tariff situation. But we saw more companies raise guidance and lower guidance. So as companies report this earnings season, that's what we'll be looking for. Is it really impacting their businesses? Our bet would be that we're going to see more benign reports than the negative outlooks per se. So we've seen analysts lowering forecasts at the margin heading into this earnings season, but that negative sentiment typically sets the bar low. And I think the one sector where you've seen some negative sentiment is in the consumer discretionary sector, and that's where you could see some positive surprises.
So what are you, I know you guys do amazing work. You've talked about consumer discretionary, but you've also talked about the Dow transports, because transports are seen as a leading indicator. Philadelphia Semiconductor, the SOX
even more
index.
Than a leading indicator.
It is. Okay, so my question was going to be, of those three or anybody else, is there one index or group of stocks that you're watching more than others?
So I think the semiconductors are what we've been calling them for years now as the transports of the 21st century. They are the leading indicator of the digital economy. And their relative strength, they're not only hitting new highs, their relative strength versus the S&P is hitting a new high. So that's important to watch. AI infrastructure stocks are still hitting new highs. So those two areas are what we're looking for going forward. For all the concerns, I mean, you think back 6 weeks ago, people were concerned again about the AI trade and about all the infrastructure. Those stocks are now hitting new highs. And even as NVIDIA has been sideways, the rest of the sector and these infrastructure stocks are doing well.